Sandip Sabharwal as well joins another show. Sandeep, hi, good morning. For once, I was chatting with Kunal. We're feeling bad that Thursday was a trading holiday. What do you do next? So much volatility, so much news flow, and finally a 90-day reprieve at least when it comes to tariffs.
It's good that Thursday was a trading holiday because we would have risen and then fallen again today. So at least if we rise today, we go into the weekend happier. So I think that's there. So I think now what's the end game of this entire tariff thing is still unknown. But I think a 10% tariff which remains, I think is still adjustable for the US economy. And that will actually get them the import revenue, the tariff revenues which they want. Exorbitant tariffs, like what is there with China, is effectively saying that there'll be zero trade because at 70, 80, 100, or anything above that percentage tariffs, it's impossible to have trade. So I think trade stops between those countries for now and carries on between the other countries with some friction with the US because even a 10% tariff and 25% tariff on some other products will be somewhat inflationary and also will lead to slowdown. So that's there. So I think that there's global asset price impact. Volatility has gone up through the roof. If you see what's happening to gold prices, the US dollar index, the way indices are gyrating. So I think this volatility should peak out sooner than later because this kind of volatility normally doesn't sustain, and then different markets will perform differently. In the Indian context, I think both fiscal and monetary policy are supportive for this year, and India overall should do reasonably well. I don't see that at least the domestic focused companies there will be much negative. In fact, they are positive tailwinds only.
Sure. Um, Sandeep, soon we already have TCS out of the way, but soon we'll have earnings coming in from other sectors as well and companies. What is your anticipation on whether or not we're going to see some earnings uptick and better than what we had previous quarter?
So I think this quarter generally is expected to be slow. So I don't have very high expectations in terms of earnings per se. But the outlook is better, I would say, for FY 25-26, given the way the interest rate trajectory is working and the fact that there is now seriousness within the government to push forward the capital expenditure which they have proposed for this year as they underperformed last financial year. So I think this year will be much better in terms of earnings. So I think FY 24-25 would end with a 4 to 5% overall earning growth. And 25-26 should be like earlier, the expectations were around 15 to 14, 15% growth. But with these uncertainties on export sectors, maybe we could end up with 12%, which is also pretty reasonable.
Sandeep, you've been a buyer in India equities, I think, from what, March onwards at least. You've been vocal that, all the bad news is already behind us after the deep correction that played out for us since October up until Feb end. Tell me, where would you look to add positions or buy afresh?
Among the large cap, we've seen a sharp sell-off in L&T without there being a significant deterioration in fundamentals per se. So I think at I think it's around 3,050 or 100 around those level. I think it represents a good opportunity. Uh, then I think the larger banks and even NBFCs, I think from what the RBI governor has said in terms of maintaining liquidity at 1% of the long-term deposit average, I think that will give a lot of liquidity support, and typically good liquidity with reducing interest rates is positive for NBFCs also. So I think the highly rated NBFCs should also do well. And then we've had sell-off across the board in many sectors. So I think uh, even a lot of Indian auto stocks which are not actually exposed to the US. They benefit as the interest rate cycle moves down. Input prices are still moderate. Cement, infrastructure as sectors could do well. I think there are several sectors where opportunities exist.
Sandeep, are you not concerned about L&T's exposure to the Middle East market? It's, I think, over 30%, right?
Yeah, so there is some expectation that because of oil prices falling, there could be some slowdown on those projects. But a majority of these projects are not in the oil segment per se. So there are gas projects, the sector which I think still will go on because gas demand is expected to remain strong. So there could possibly be some impact on future order flows, but I think the existing order flows should potentially keep on proceeding. And people always expect that the oil prices which have fallen will remain down. So I think oil prices have fallen for 15 days. They could put bounce back also, etc. So I think at these prices, given the fundamentals, a lot of the negatives in my view should be in the price.
Okay, I just want to highlight TCS, given that the numbers were weaker than expected. Pat missed the estimates because of the margin miss. Higher BSNL ramp down as well led to the top line miss. And record TCV is going to lend stability, at least but that is what the management seems to be indicating. We will, of course, hear out the top brass right here in ET Now with a one-on-one chat. But Sandeep, could IT turn out to be a contra call, selectively some of the IT names, or would you say still steer clear?
I think many of the larger names, like for example TCS, it's fallen a lot, and at the current prices, it has a dividend yield itself of 3.5-4%. And a lot of negatives seem to be in the price. It's just that if the US economy deteriorates significantly, then we could have some more impact. But I would think that given the kind of deal wins they have seen and their confidence that 25, 26 will be better than 24, 25, I would think that negatives are in the price, at least for TCS, if not for some of the smaller IT companies which could get whiplashed because of specific client issues which the larger companies do not. So, so I don't think there's too much downside, at least to TCS from the current price.
Sandeep, it's like saying that if there is a kid in the house whom nobody is expecting anything, suddenly, without failing, if the kid passes, the family starts celebrating. Can I say that is a sentiment for TCS? These are not great numbers. But the fact that stock is down, expectations were low, they are saying that it is 2 quarters of pain and hopefully things would settle down. So can I say that it is that situation where no hope, and if something incrementally better also happens, the family starts celebrating?
It's like that, like it's like the tariffs also, right? So in the removal of the reciprocal tariffs, everyone seems to have forgotten that the 10% tariffs still remain. So everyone is so relieved that those high tariffs are gone, but those 10% tariffs remain, which were not there 10 days back. So it's a similar thing that when a lot of negativity gets built in, a small amount of positivity is a bigger positive.
Okay, Sandeep, so good having you on the show. Thanks as always.
If you like this video, then like, share and subscribe to ET Now.